Bruce, thank you so much for joining us here at SuperReturn International.
Good morning.
Great to have you here. Thanks so much for sharing your insights, and you've talked a lot about Brookfield's approach and how your PE platform sits within that.
Yeah, look, we've been in the private equity business a long time, but we've built two very, very large businesses, which is infrastructure and real estate, which are among, if not the biggest in the world in those areas. And what we try to do is advantage ourselves to the betterment for our clients of in our private equity business by utilizing the knowledge we have and the platforms we have in infrastructure and real estate to build and buy businesses that surround those areas. So we're trying to utilize that knowledge and information we have to get better returns.
So tap into what you already know to bring those that
value. To give you an example, we bought Westinghouse Electric, which is a servicing company of utilities owning nuclear plants, and all we do is service them. Westinghouse services their facilities, but because we were in the power business. In renewables, we knew the utilities that operated these plants, and we understood what the duration of most of those facilities were because we understood the power markets. So while we were buying a servicing company, the knowledge around, because of our other businesses, gave us a big information advantage when looking at the investment. And in investing, as you know, having greater amounts of information is always helpful. And it lowers your downside risk or possibly gives you greater returns.
You believe that truly differentiates you, that depth of knowledge?
Yeah, look, I'd say in investing, you have to try to figure out what are your key competitive advantages. And we've tried to circle in on 3 advantages while being a value investor. And the first one is size. We raised very large sums of money and put them to work, and there's not too many people that raise as much money as we do. We operate in 30 countries around the world, therefore we're on the ground and we're local players in those places, and we can actually put money to work in those countries. And last and maybe most importantly, we have 100,000 people around the world, and they give us that legs and information advantage, and if you can use those, it's just very helpful to the franchise.
You described yourselves there as a value investor. Tell me about that and how important that is to you, as how you're perceived in terms of what you put your money into.
You know, there are shades of investing, and I would just say our what we're always trying to do is to invest in businesses on a value basis, which allow us to have just a margin of safety when we're investing. And some people are investing at a stage hoping that it's going to grow. We're always trying to make sure that we have a margin of safety. So we're trying to buy it at less than what somebody might deem as fair value, and often it's on a contrarian basis. So it's either we're in a country when it's not in favor, we're going into an industry when it's not in favor, or we're doing something that because of the things that we have, we can operationally rework that others couldn't do. And so it's always, we're trying to use those competitive advantages.
You talked there about it being contrarian. It is a cultural approach from Brookfield. You even have, I think, an image in your offices of a flock of sheep flying over a cliff and one travelling in the other direction. Yeah. And you want to be the one, don't you?
Look, it's never simple and it's never easy. Investing is the one thing everyone should always admit to themselves. Investing is not easy. Even for people that do it all the time, every day, it is not easy. But if you can try to walk in the other direction, carefully I might add, because you can also make mistakes doing it. But over time, if you don't get caught up in the whole crowd, then what you can do is often it allows you to have that value investing or margin of safety when you invest into things. And we just find it's for us. It's not for everyone, and it's not simple, but we've always found that's the way that we've best facilitated returns.
You talked there about having a safety net and having sort of protection of the downside. That's incredibly important to you, in particular at the moment when there's so much talk of recession. What are your greatest concerns at the moment, and how do you prepare for that?
Look, the greatest thing we can do is ensure that when we invest in things, we acknowledge that we're going to go through tougher times in the marketplace. And that's probably the biggest thing we can do for the returns on behalf of everyone that we invest for. The things in the world that obviously affect everyone we're in the late stages of a cycle, a global cycle, which has run for 10 years now since we hit the global financial crisis. And interest rates are low, and we think interest rates will stay low for a long time, but both of those things are risks that are uncontrollable that are out in the world.
You talked, I think, specifically about Japan in those terms, and indeed Germany as examples of interest rates that could shift quite significantly.
No, look, interest rates, they're zero out to 20 years in Japan, and they're virtually zero in Germany at 10 years. It doesn't look like they're going up in the short term, maybe even in the medium term, but what I said was if they went up dramatically, that would be a big change to the world. We don't think that's going to occur, but that would be a very significant factor in the world if that occurred.
Talking about changes to the world, we've heard a lot today and yesterday at this conference so far about the rise in populism and how difficult politics are to navigate at the moment. So what effect does that have on private equity and what the public expect companies like yours to be investing in?
Yeah, I'd just say the following. We've been a renewable investor for 30 years. In fact, before renewables was even thought of as renewables, it wasn't named renewables then. We were investing in clean technology. And we did that because we felt it was a good place to invest money. And in the long term, those were the technologies that were going to succeed. And what I would say is being a socially and environmentally conscious investor is important for the sake of returns, not just for saying that you're one of those investors, because it's good business doing that. And I use the renewables example as we're one of the largest renewables investors in the world, and we don't do it because we think one should get into social investing. We've done it because we thought that the energy stack in the world would change to, and we believe today, over the next 50 years, it will change to renewable technologies.
At the heart of it, it makes good business sense, but it's good for public perception too.
You actually said it better than I tried to. I tried to say that. It just makes good business. Yes, it appears like, it looks like we're trying to do good things for the world, and we are, but it's just good business.
And Brookfield is obviously known for investing in infrastructure, particularly, which you could view as something that is bettering society too.
Yeah, look, the things that we invest in infrastructure are things that you wouldn't even know that someone like us bring to your house. It's the water you get out of the tap in the morning. It's the electricity that comes into your house. It's the gas connection that brings the heat to your house. It's the toll road you drive on in the morning. It's all these things which you take for granted that are there, and before government provided it, they can't provide it in the quality that you need it today. But with the capital that we bring from institutional clients who are looking for these returns, we can provide that type of infrastructure, and it is bettering the economy. It's amazing some countries that we build toll roads in, and people took 3 hours to get to their back and forth from their office in the day, and it becomes a half hour. It changed somebody's life. They can now be with their family. These are incredible things. So again, it's good business to do it, but they do contribute in incredible ways. And
that sort of infrastructure investment does require a slightly more long-termism type view, and I think that's something you hold.
Look, our thesis of investing has always been much longer term investing, and some of the funds we have need to have shorter term durations, but these are durations at 10, 12 years. So our money's either 10, 12 or perpetual capital, and we've always had a much longer term attitude, and we think again that differentiates us in our thinking and what we bring to counterparties we invest into, management teams we recruit to work with us, and also governments and other organizations that we deal with, because they want to know that we're going to be there at the end of the day.
Those are your comfort zones, if you like. Is there anything that's tempting you to be pushed out of those? Things like the evolution of tech and things like blockchain technology and investment in perhaps data centers, those sort of areas. Are there areas like that you're interested in, or are you sticking with what you know in this climate?
So I would say one should always stick with what they know and what they do. Always, though, we're trying to use the knowledge we have and increase the bandwidth of what we do. And I use bandwidth of what we do because in infrastructure, the largest growing form of infrastructure is data. Data is like a commodity, and there's an enormous amount of backbone infrastructure that needs to be reinvigorated for 5G. And the investment is enormous, and many of the telecom companies need capital. So we've been investing in data centers. We own telecom towers. So we're always trying to edge out our expertise in these areas, and that is one of them that we are heading in a little direction towards technology.
Now, with all your experience in this industry, people do look to people like you with your amazing track record for gleaning tips and hints and looking forward what you expect to see. So just to round this off, what would you say people should be looking out for and seeing opportunities in the next, say, 12 months?
Look, I don't make comments on 12 months. I have no idea what will happen in 12 months. I just say that everyone always gets depressed by something that's near them. If you're from the UK, as you are, people are depressed about Brexit. If you're in the US, they have something to talk about. If you're in Australia, they have something to talk about. If you're in Spain, they have something to talk about. If you're in Brazil, they have something to talk about. The only comment I would make is the world is an amazing place. The amount of people that are moving into are getting richer and richer every day. And they say, geez, people are falling back. Yes, in degrees, but the whole world is lifting up, and the economies are getting better and businesses are getting better. So from investing, I just say that the world is a great place to invest and think for the long term.
A very optimistic note to end on. Thank you so much for joining us, Bruce. Great to hear your insights. Thank you.
Thank you.